Hello.
Hi, how are you?
Good. How are you?
Good.
Nice to see your face.
Yeah. I think we've got 14, 13-ish people. So we'll just
Okay.
for a couple minutes.
Okay. Yeah, we're early. Mine was sent to my FU's email, so I had to actually create an account quickly. I was like,
oh, really?
Yeah. Yeah, I remember when you set that up, it's been a bit ago, right? And I was like, you couldn't, I gave you a couple of different options there.
Oh, gotcha.
But yeah, anyway, here we are.
Well, we're in.
We're in. We did it.
Yes. Let's see.
Good morning.
Morning, Dezaree.
There we go. Yeah, I had to, funny enough, set up a Zoom for this email as well. I'm like, I don't have one on this.
Did you?
Yeah. So I'm like, oh no.
I know. That was me. Oh no.
Oh, it's going. All right.
I was going to mention, Kelsey, too. We had, since you started sending out notifications, we've had 4 more hop on and.
Oh, sweet.
Yep, they've started the process. In fact, one just signed last night.
Oh,
so
I love it.
Yeah.
I'm glad they're taking advantage of this opportunity.
Yeah, same.
Yeah, definitely. Hopefully we can get more excited on this one. We're going to talk about how it's possible because they're so scared. And yeah, this is just going to be so exciting.
Cool. Well, let's give it just like maybe 1 or 2 more minutes. I had 14 people register for it. Looks like we've got 6 of them on. So we'll just wait for a couple more minutes and then we can get started.
Great. Yeah. Yeah. And you're good to, let as many of them flow in as you can.
Okay.
My hair looks weird this morning.
I told you mine did too. It's because I read that article.
No, yours looks good. Kelsey's looks the best.
Yeah, seriously.
About a thing of dry shampoo in it. So.
Okay, so that's what I read this morning was about the dry shampoo article. Now I'm like, oh man.
I know. Can't win.
The cancerous ones.
Yeah.
Okay. Well, let's get started. Good morning, everyone. Welcome to our ERC webinar. We've got Janeen and Dezaree here. They are our ERC specialists. They're going to take you through a little bit of an overview of how you guys can still access COVID funding through the CARES Act. So I'll turn the time over to them.
Hi, everyone. I can't see any of you here, but I'm so glad that you've taken the time to join us here. This is actually the second webinar that we've done for AGC, and so we're excited that you've decided to hop on and take a look. So Dezaree and we've actually worked together in several capacities over the years. We've known each other for a while, and doing this ERC funding has been one of the funnest and most rewarding things that we've done together, I think. It gets super exciting, and Dezaree will tell you a little bit more about that with some of the companies that we've worked with. But let me turn it over to Dezaree. We want you to be aware that this is available. This is something that you can do, and we want to help you through the process. So Dezaree, I'll let you take it from there, and then make sure you put any questions that you have. Just raise those and we can answer them for you.
Thanks, Janeen. Thanks, Kelsey. Good morning. So we are going to talk about money, and there is a lot of it that's still available. And there's a lot of questions on how to claim it, especially for essential business. A lot of essential business did really well during COVID, during the pandemic. And we've talked to a bunch of them that made money during 2020 and 2021. And they think they don't qualify because they did really well. That's actually not the case. So there's 3 ways that you could potentially qualify for these funds, and we want to dive in on them. We want to go ahead and clear up the misinformation, educate you on the process, help you understand the ways to qualify and what's needed to support that. So we want this to be as interactive as possible. If you have questions, drop them in the chat. We'll have time to go through them. And I'm going to tell you all about this program. Here we go. Okay, so we're going to talk about the Employee Retention Tax Credit. It's getting a lot of buzz right now. And you're seeing companies pop up all over the place. There are commercials, they're on the radio, everywhere right now. You're hearing about the Employee Retention Tax Credit. This program actually came out with the PPP. So it came out quite a while ago. And when it launched, you could only get one or the other. You couldn't claim both. And because you did have to qualify for the Employee Retention Tax Credit, most people opted to go with the PPP. Now, it's old regulations that state you couldn't qualify for both. The program has changed. Now, if you got the PPP, the first, the second, you can still possibly qualify for the Employee Retention Tax Credit. On March 11th, 2021, President Biden signed the American Rescue Plan Act of 2021, also known as ARPA. This is what started to modify this program. It's been amended 5 times. It's over 280 pages. And it's got a lot of changes in it. So we're going to dive in on those, especially as it applies to essential business. So this program has a lot of money available, up to $26,000 per each W-2 employee. Now, you do have to have W-2 employees. If you've got independent contractors or 1099, you would not qualify for this program. Because of the way they're paying this out, it must be W-2 employee based. You do have to qualify for the program. So unlike the PPP, you have to qualify one of 3 ways for this, but you can use the funds however you like. So it's not regulated the same as the PPP where you had to use it for payroll, rent, utilities. You can use this money how you like.
Dezaree, are you seeing that it's not loading on your end? The full screen, your screen is not loading.
Nope. Okay. That makes a difference for sure. Let's try this again. Tell me if you can see this. Nope. Are you seeing this at all?
There we go.
Okay. Thank you.
Sorry about that, everyone. I wasn't sure if it was just me or if it really wasn't loading. So
yeah,
okay.
And we're going to send you a copy of this deck as well, so you'll have it for reference. Yeah. Our goal is to provide you with education and guidance regarding this program so that you have the resources to go through, determine if you qualify, and that you can reach out to us with any questions. Okay. The Employee Retention Tax Credit came out at the same time as the PPP. So it's actually been out for quite a while, and it's finally getting the buzz. People are seeing this is actually a legit program. So, and they're also seeing that their friends who have qualified for this are receiving the checks, they're receiving the money. So a lot of hype about this right now. Okay, up to $26,000 per each W-2 employee. This can be a lot of money. Think about it. If you have 10 W-2 employees, that's up to $260,000. If you have 100, that's over $2 million. So it's a lot of money on the table, and it's well worth paying attention to and figuring out what you need to look at to determine if you qualify and what documentation you need. Okay, so there's 3 ways to qualify for this program. The most common and the most talked about is revenue reduction. This is what most people are familiar with. So they'll say, hey, I talked to my CPA. He said we don't qualify for this program because we didn't lose money. Okay, that's fine. That's one way to possibly qualify for this. There are 2 other options. supply chain disruption, and a full or partial suspension. And we've seen essential business qualify on both of those. So,
and by the way, Dezaree, right, you can have made money and still qualify in one of these other areas.
Absolutely. Yep. So just because you didn't qualify with revenue reduction, it doesn't take you out of this program. You could still possibly qualify on supply chain disruption, especially for essential business. I mean, we're going to talk about it. We're going to talk about what you might have seen during 2020 and 2021 in your business. For revenue reduction, actually, we're looking at 6 quarters with this program. So 6 quarters that you could possibly qualify. You could qualify for 1 quarter up to 6 quarters. For 2020, you must have had less than 100 full-time employees. So if you had 99 full-time employees and 50 part-time employees, you could still potentially qualify for these 3 quarters. If you had over 100 full-time employees, then you would be limited to 2021 quarters. And there are 3 quarters available there. That means you must have less than 500 full-time employees for 2021 to qualify for these quarters. This is a small business tax relief program. And this is how they're allocating the money. So for 2020, you can get up to $5,000 for each quarter with a $5,000 max per each employee. But for 2021, they've allotted $7,000 per quarter with a $21,000 max for the year. So this is how we're getting to $26,000. Okay, so what we're going to talk about is average number of full-time employees for 2020, 2021, and 2019. We're going to compare gross receipts to see if you qualified on revenue reduction from 2019, 2020, and 2021. And we're going to talk about how the shutdowns impacted your business with supply chain and suspensions. The first question, did you pay W-2 wages in 2020 or 2021? Because if not, there's no need to go any further. How many employees you averaged will determine if you qualify for 2020 or 2021 or both. Okay, so for revenue reduction, if you know you made money, don't worry about this one. We're going to jump to the next 2 and they will be really important. But if you did experience a loss of gross sales as compared to 2019, 2019 is going to be the baseline that we're going to compare everything to: supply chain disruption, suspensions, and revenue. So you want to compare each quarter in 2019, quarters 1, 2, 3, and 4, to the same quarters in 2020 and 2021. If you experienced a loss of 50% or more for 2020, then you would qualify for that quarter. For 2021, you're looking for a 20% loss of gross sales. As compared to the same quarter in 2019, again, we're not going to spend a ton of time on this, but I want to make sure you do understand the revenue reduction. So this is what we're looking at. In 2019, if you made $100 a quarter, if you experienced a 50% or more loss of gross receipts for the same quarter, then you would qualify. Quarters 2, 3, or 4. Quarters 1, 2, and 3 in 2021, it's a 20% loss as compared to those same quarters in 2019. Again, if you made money, don't worry. This is just one way that you could qualify. Okay, supply chain disruption. So this one is probably the most confusing way to qualify and also the most applicable to y'all. So what we're looking for is a supply chain disruption due to vendor shutdowns that resulted in more than a nominal impact of 10% or more on your business. This does not relate to whether or not you made money. This is a supply chain disruption because of your vendor that might have had a suspension or a government order on them. So we're looking for a more than 10% impact because of this supply chain disruption. So you want to make a list right away of what items you had supply chain disruption on, who the vendor is, where they came from, and start to look at the impact that it had on your business. Okay. So for example, they've got one right here. For example, if you were not able to procure pallets for the shipping of goods, consider how much of your business relied upon pallets in order to operate in 2019. If this was more than 10%, this qualification can apply. We're going to go through some examples again, you're going to look and see what was the impact. The supply chain disruption was huge for 2020 and 2021. And it's well worth taking the time to document this. I'm sure you had a lot of emails and POs from your vendors saying, hey, we're not able to get this in. Hey, shipping times are delayed. That's what we're looking for. So there's tons of stuff. Plastics, steel, lumber, HVAC. HVAC was delayed for a long time. Iron, concrete, lumber, plywood. So these are just lists, but what we want from you are names, brand names, vendor names, where they came from, if they were from out of the country or from what state. So you definitely need to get specific, and it doesn't take a lot of time. But when we're talking about possibly you getting hundreds of thousands of dollars, sit down with your office manager, sit down with whoever does your ordering, pull up those old emails, look and see what did we have the biggest issues with for supply chain. This is where most people stop. They don't realize how they can claim this funding. And I'm walking you through it right now. So to claim this funding as a supply chain disruption, even if you made money during the pandemic, you're going to look for suspended shipments of production due to a U.S. government order. So again, you're not able to find an alternate supplier. It might be something that's coming from out of the country that got stuck in the ports. And the loss of revenue was more than a nominal impact of your business, meaning 10% of total company revenue, or if it cost you 10% more in labor. So we've seen this for a number of essential business where the materials were delayed enough that now they had to send their guys out twice to do a job instead of once. So it cost them double in labor. That works as well. And I'm hoping that we're going to get some questions on this because, again, it gets kind of confusing. I'm going to try and simplify it as much as possible to just go back through your orders, write down anything that was delayed, anything significant that's specific to your business. We saw this, windows were majorly delayed. We've worked with a lot of those. MDF, the resin, they could not produce the resin, and that delayed everything. So we worked with a cabinet manufacturer, and their drawer glides were delayed for over 6 months. They were coming out of Italy, and they could not find reasonable replacements here. They were able to qualify. So the documentation is going to be what helps this become a really solid case, and it's well worth claiming. And we've worked with some essential businesses that are getting millions, and all they're doing is taking the time to document this. So we're looking at this. Okay. So you're looking at the sourcing point. So the manufacturer that produced the goods, were they delayed? Because think about it, they all had some type of government order. Even if it was just initially, there was a government order, there were suspensions, there were restrictions on capacity in place. So we want to see who the manufacturer is, where they came from, and we're looking for a government order on them that impacted your supply chain. Storage point, it could be at the storage point. If they were stored locally, waiting to be shipped. On those cargo containers at the dock, those were all delayed. Transfer storage point, shipping, could have been trucks, trains, shipping at sea. The cargo ships, we all watched it. We watched those, especially in LA. So, and I've got that pulled up next. And then the destination point. So at any point in this, we're looking for where it would have possibly been delayed, and it might be multiple points.
Dezaree, you've got a couple of questions here. Todd?
How do you you mentioned documenting that. What kind of proof or documentation do we need?
Yeah, so if you received emails from your vendors or your suppliers that's saying, hey, you ordered these and normally it takes 2 weeks to get in. Well, they're out 6 months now, or the delays, it's going to come in 4 months. We'll update you due to the pandemic. Supply chains disrupted, right? Anything like that, you want to pull all those emails, and it's easier to do it now than later, why you can still find them. And usually they send out kind of a bulk disclaimer, kind of a bulk email saying, hey, we've been impacted. by the pandemic. Manufacturing's been decreased. We're not going to be able to get these out on the same timeline. Anything like that where they sent out the information to you, pull those. But you're really looking at any of the supply items that had a main impact on your business. So make that list and then start going backwards, looking for the emails, the disclaimers, any notices that were sent out. You know, we had this from a lot of trucking companies that ordered additional trucks, right? And then they received notice from the manufacturer, hey, due to COVID, we're not going to get these out to you for a year. That's a lot of information right there. They needed that email. And then we pulled the supplier and found the government order on it. So
would that even count as like concrete was hard to get? And so he said, you know, due to concrete shortages, we're unable to fill your orders.
Yep. So you want to make sure, so you've got those emails, and then did you find a reasonable replacement? So again, you know your business better than we do. You have to determine what's a reasonable replacement. You know, going back to that cabinet manufacturer, well, they were able to find drawer glides, but they weren't soft close. And they only use soft close. They're a custom cabinet manufacturer. So they had a replacement, but it wasn't the same thing. And it impacted their business at least 10% or more, because that's all they produce is cabinets. So working back, what was the impact of concrete? How long did you have that delay? Did you do at least 10% in 2019 of concrete? So there's a little bit of homework. It's not too much though. Not when you're looking at hundreds of thousands of dollars.
Sorry, let me read you this. You may have answered this already, but there's one on the chat. It says, what documentation do you need to have to justify not being able to find another supplier of materials, especially if a business didn't even try to change suppliers and just dealt with the delay? That's from Peter.
Well, I mean, then that makes it pretty easy, because you didn't find another supplier. So you just suffered the supply chain disruption. If you were able to find another replacement, so we've seen this with convenience stores, you know, that had, or even restaurants, they had shipping materials, to-go materials. They weren't able to find the same items. So they had smaller items, which impacted what they would normally use. And that cost them 10%. So you have to determine what that 10% impact looks like, depending on how much you used certain supply items. And maybe there's a list, you know, we've seen lists of 10 to 20 different items. That's a huge impact. People who do drywall, we saw that they had specific glues that they were using, and they had to go to different tapes. It's not the same thing. That wasn't a reasonable replacement. So you want to look and just see what, out of all the lists of things that were delayed, what had the most impact? What were you not able to find a reasonable replacement on? It could be, you know, again, the drawer glides that aren't soft close. It's not the same thing. Does that help? It's really ambiguous and vague, and I'm trying to break it down, but it really is company to company. You know the impact, and if you can document this with either the emails and what you looked at, and in 2019 you used this, and in 2020 you couldn't get that. Are there more questions, Janeen?
He had a follow-up question just saying, so just to clarify, is it not a requirement for them to even try to find a replacement?
That's a tricky one. Basically, the IRS has said, I was not able to find a reasonable replacement. So you would know how much work went into that, or how you were affected because there wasn't a reasonable replacement. Back to the cabinet company, they looked for soft close drawer glides, but pretty much just drawer glides in general were sold out. You know, everybody went for what was available, and then they were gone as well. So yeah, I'm not sure how else to answer that, because, you know, they're not going to ask you, well, how many vendors did you call? You know, it's going to be up to you. How did you try and source it from other vendors that you would normally use, but they were sold out as well? And that was the end of it. I don't know. Yeah, the documentation that we're really looking for is, why did you have the delay? Who was the vendor? Did it get stuck in the ports? Did it get stuck in the manufacturing? Was it because there was a government order on it? So that's the main focus. That's what we want to look at, is what items were delayed, what was the impact they had on you. You know, if you were able to just switch to a different type of material and there was no effect from that, then that's not going to work. But in construction, there are so many different materials, you know, that were delayed. So just find the ones that apply to your business the most, that you just had to wait out, or that you had to try and source from a different one. And then work backwards from it. Was it the manufacturer that got stuck at? Was it out of the country? Was it in shipping? And that's the documentation that you want. So again, it's a little bit of homework, but well worth it.
And again, you're just looking for a 10% impact. So, you know, that should help.
Yeah. So this is what's interesting on supply chain disruption. We're actually seeing, you know, suspensions were kind of more of a 2020 thing, but some of them did extend. It depends on which states you lived in and how you were impacted with the suspensions and partial suspensions. But for supply chain disruption, we saw it, you know, carry over. In fact, we're still seeing the effects of supply chain disruption. So you would know which quarters you were impacted. It could be one quarter, it could be all of them. Again, this is the key. My business was not able to find a reasonable replacement supplier, and I had more than a 10% impact. Again, does not mean revenue must have decreased. So it's not related to your revenue. It's related to the impact of the supply chain disruption. And it could just be one specific thing. You know, Maverick gas stations, Flying J gas stations sell a 32-ounce drink, and they were unable to get that 32-ounce cup in. They could get 24-ounce from an alternate supplier, but not a 32-ounce, and that impacted their business 10% because they sold a lot of those drinks. So you're not looking for anything that's really crazy. Just go through what was delayed, what has an impact. I mean, it could be something very simple. And the more that you have, the better. But you know, it could just be one item.
So how do you show the impact? If there's a material, fire hydrants, we couldn't buy fire hydrants and we still have a hard time getting them. So the impact is we have to wait months to get the parts we need. How do you show that impact to show the 10% impact?
Yeah, so what you want to look at is 2019. So 2019, you were able to get how many fire hydrants, right, per quarter. And this is the impact of 2020. You were able to get how many per each quarter. And that's a difference of how much, right? And that hits your revenue this much. So you just want to kind of work backwards on the impact of what 2019 looked like and then what happened in 2020. And it could be labor. It could be, well, fire hydrants contribute 20% to our bottom line. So without that, it impacted us at least 10% or more.
Does that make sense, Todd?
Yeah.
Okay.
Yeah, 2019 is going to be the baseline. So go back to what you did in 2019 with whatever you have on your list of supply chain disruption. So whatever items were delayed, were impacted, go back and see how much of an effect it had in 2019 and then where it left you in 2020 and 2021.
If I could show, hey, I needed 20 fire hydrants in the first of the year, but I didn't get them till July. So for those 2 quarters, I could show I wasn't able to install any fire hydrants. Or do you have to show the whole year? Or it looks like you can show it per quarter.
Per quarter. Yeah, because remember, they've got a dollar amount that you're qualifying for each quarter. So if you qualify for 1 quarter, it's up to X number. And if you qualify for 6 quarters, you've got that dollar amount per each quarter, right? So that's why you want to look at both years and see what kind of impact you had for all of these quarters to see if you can claim them.
Go ahead.
I'm going to go back to the trucking example because it's easy math. So in 2019, they had 6 trucks and they made $200,000. Well, we'll say $600,000. So $100,000 from each truck, and they had ordered 3 more trucks. So they would have made an additional $300,000 if they would have had the trucks, right? But they didn't. So that's at least a 10% impact because of that supply chain disruption. So you want to look at this however makes sense to you, either the impact or did it cost you more in labor? Because now you had to go back to a job 2 or 3 times because the parts came in piece by piece by piece instead of all at once.
I was just going to say there to Todd and to all of you, actually, when we get to the end, we're going to give you some information. When you start filling out this questionnaire and you have questions or you need help, just reach out. I'm even going to give you my phone number. You guys can call me. Just reach out and we'll walk you through that questionnaire and help you through it. Okay.
Yeah, and we can help you through it. We just need on your side is the list of what was delayed, the vendors, what state they come from, just some homework. And again, sit down with whoever does the ordering, or if it's you or your office manager, pull the emails and then go back to 2019 and compare so you can look at the impact. And then get an idea on timeline. How many quarters were you impacted, right? This is 2020 quarters 2, 3, and 4, and this is 2021 quarters 1, 2, and 3. Okay, are we good on supply chain? I'm going to touch on suspensions because this has also impacted essential business. Okay, full or partial suspensions. So where we've seen this impact essential business, it doesn't mean you were closed down, but it means there were government orders in place that restricted your business. You're looking again for more than a nominal impact of 10% or more on your business operations. So this does not relate to revenue, does not mean that you had a loss on revenue. What it could be is if you were closed down initially, or if someone tested positive in your office and you had to close down because of that. If you had a reduction in hours. So these are the suspensions right through here: reduction in hours, inability to access equipment, reduction in services offered, reduction in capacity, travel restrictions, and actual suspensions. So we've seen this, especially with contractors, if they were getting building permits, licensing for equipment, if job sites were closed or restricted the capacity of how many people could be on site, any delays on the project because of government orders. This would all apply. So you want to look at your projects, work backwards. Why was it delayed? Was it because there was a reduction in capacity? Was it because, the city or county buildings were closed and we couldn't go get the permits? This one is not, it's almost the same as the supply chain. You just have to work backwards on 2020 and 2021 during those quarters as compared to what you normally did in 2019. You're looking for an impact if normally it took you 2 quarters to do this same job, and now it's taking a year to do the same job because of the delays, because of the restrictions. Then you would look at the suspensions, which one it would be and how long it was impacted. For suspensions, again, we haven't seen a lot of them go through 2021. We've seen some. It depends on the state you live in. I live in Texas. We had less of them than other states, but 2020 quarters could be all of them, might be some of them. So you want to go back, look at permitting, licensing, any jobs that were pushed back. We had some contractors, they were building nursing facilities. They couldn't do it or remodeling, adding on to them. That job was just pushed back until the government orders were lifted. Or if there were restrictions on how many people could be on a job site, going in and out of homes, projects, anything like that. If there was a government order in place, then it would count as a suspension. So do we have questions on this one? Now, remember, you only need to qualify in one way. So if you didn't qualify on revenue reduction, there's still supply chain disruption and suspensions. Now, if you think you're going to qualify on supply chain disruption, then you don't need to do both. If you wanted to, it's up to you. you know, I guess it makes it more solid. I don't know. It's up to you, but you only need to qualify in one way. And I mean, we've had some large contractors getting over $1 million, and it's all supply chain disruption. We've had some manufacturers for solar, and they're getting multiple millions of dollars, and they weren't, you know, they had restrictions on suspensions and supply chain. The more documentation that you can give us, the better it is. You know, this is where, again, we're pulling whatever suspensions we want to look at that were in place that helped impact that. And also the supply chain. The supply chain was such a big thing. And for some reason, it scares people off because they think, well, I didn't lose money and I don't know how to prove the supply chain. Just do a little homework. Just dig in on it a little bit. You've got the emails. They were sent out from almost every vendor that was impacted or delayed. So you've got that. You just need to go back through and find it. And sometimes we've had clients that are even, you know, requesting from your vendors, hey, did you send out a notice? Can you just resend that to me so that I have it? Get those. That's great. That's what you need. So this isn't something to be afraid of. There is a lot of money available, but if it's documented and it's accurate and everything's valid, that's great. This is what the IRS has told us. You know, find out what the vendor is, what the item is, where it comes from, and where it's getting stuck, and what the impact was. Okay, so I'm going to get to some contact info and reach out to us. We're actually in Utah as well. Our corporate office is in Orem. We've got over 200 funding experts ranging from tax attorneys, consultants for the IRS, previous employees of the IRS, CPAs. Our director of fulfillment is on the American Payroll Association and on the board of the Utah Payroll Association. And members of our team have done accounting and auditing services for agencies such as the FBI, the FDA, the SEC, U.S. Customs, U.S. Postmaster General, and the U.S. and State Attorney General. So what we want to do is make sure it's done accurately, correctly on the front end, so there's no issue, right? We're actually endorsed by Sean Reyes, the Utah Attorney General, as well as Matthew Whitaker, who's the former acting U.S. Attorney General. So here's how you get started. You're going to go to utagcerc.com. You're going to click on Begin Qualifying, and that's going to take you to the questionnaire. You put in your information, you know you're at the right place, and it's going to start the question here. And again, this is going to go through a qualifying survey. It's going to ask you the questions we just went through. It can be a little intimidating. If you want to reach out, I'm going to include Janeen's contact info as well as mine. We try and make this as easy as possible. It should take about 20 minutes to go through once you've done your homework and you have your documents. Make sure you put my name in there so we can track it in case there's anything they need that's additional from you, or to let you know when your assessment comes back. We are going to need your 941s. So 941s for whatever quarters that you might qualify for, detailed payroll report, and PPP loan information. So if you received the PPP loan, we need to know how much you received, when you received it, and how many weeks did it take to exhaust. And it takes about 1 to 2 weeks for us to get you back an assessment. That's the exact amount that we qualified you for. From there, it's up to you if you want us to file it. There's 2 options. One's a 10% prepay, 10% of whatever you get back, or if you want to wait until you receive the checks, it's 15%. These checks come one at a time. So if you qualified for 6 quarters, you would get 6 checks. Right now, it's taking 16 weeks for the IRS to process these claims, and sometimes a little bit longer. It depends on the amount that you're receiving back. So here is contact information. I've got Janeen's email, phone number, as well as mine. Reach out to us with any questions. We're happy to walk you through this. We want to make sure you understand it, you understand the process and what's needed. And then it should be 15 to 20 minutes going through the questionnaire to get that assessment back to you.
Hey, guys, any other additional questions? We really want to make this easy for you. We want you to be able to get on, be successful. Again, it's a matter of do that little bit of homework. get on, do the questionnaire. It's going to take you 20 to 30 minutes. Once you've submitted that, then you're going to get an email back with a link asking you to upload those documents, and then you wait. So yes, it's a little intimidating, and it can be you know, a little bit time consuming on that front end, but very well worth it. Dezaree and I have seen the exciting stories, and it is well worth your time. So I do see a couple of questions that just popped up in the chat. Let's see which ones we have not answered here.
Let me go back to so you have that.
Okay, if a company had the best year they ever had, but still have emails showing delays, is there concern the IRS will disallow the credit? Good question.
It is a great question. And that's the thing that's scaring so many people away from applying. But they opened up these other two options, not related to revenue increase or decrease. So you could have had the best year, done really well, and you were still affected by the supply chain disruption, or you still were impacted by suspensions or partial suspensions. And it is definitely available. If you meet the criteria, you can absolutely claim the credit. You know, we've worked with a number of members from the Utah Association of General Contractors already, and on average, they're getting about $1 million back. It is well worth looking into.
Yeah, definitely. Okay, and then yes, the last question from Chad. Can I get a copy of this presentation? Yes, we are going to send this out we will send it to Kelsey, and then we'll have Kelsey disperse it out to the members so that you guys can go back and review.
Yeah, and again, on that note, you want to look, okay, so we had a record year, but we were impacted by these 10 items. If we would have had them, would we have made more?
Yeah.
Any more questions?
Yep, I think we had one more pop in here. Hang on. Also, I read that the IRS extended the time to audit these to 10 years. Is that correct?
It's been extended from 3 years to 5 years. Again, this is why we want to make sure everything's done accurately. You know, I mentioned there's a lot of buzz regarding this program, and you're hearing about it from a lot of sources. A lot of companies are popping up right now, and they're offering to, you know, file your ERC, and you can claim $26,000. And it's very easy. Let me just stress, here is the problem with that. It's very easy to amend your 941s. And that's what they're doing. The majority of them are amending your 941s and leaving you liable to produce that documentation and be responsible for substantiating this claim. We want to go through and make sure you have the correct documentation to substantiate this claim on the front end. We want to make sure everything's done accurately on the front end so that this isn't an issue, so it doesn't come back. You know, and that's why we want to go through, walk you through the process, walk you through the questionnaire, make sure you have the listing on how you were impacted, what the items are, where they came from, where they got held up. You know, we're willing to educate you on this and guide you through it. So when you look at other companies, make sure you find out how you're qualifying, what documents you need, how it's being substantiated, and you might be surprised. So
yeah, and just remember, that's why we have a team of 200 people, and who they are, those CPAs, those former IRS employees. You can have full confidence in knowing that we're going to help you get through this process so that it is done correctly, and you're not going to have to worry about that. So
okay. I've left the website up. Again, you'll get a copy of this deck, and if you have questions, reach out to either myself or Janeen. And yeah,
we are here for you.
Definitely, it's worth your time to apply and to look at this and evaluate the impact. Yeah, there's a lot left for businesses to claim.
Thanks for having us,
Janeen and Dezaree. That website is actually linked on our website. If you go to agc-utah.org and head over to the resources tab, it has an ERC drop down on that. You can click on that and it'll take you right to that website. I will send you guys all who have attended or were registered for this webinar. I'll send you the slide deck, and I'll also include Janeen and Dezaree's contact information. So if we don't have any more questions, I think we are done. So thank you guys for being here with us, and we appreciate it. And I really hope that you guys take advantage of this opportunity.
Thanks, Kelsey. See you, everyone.
Thank you.